Welcome to the Stock Spinoff Investing Podcast, where we talk all things spinoffs. My guests and I may maintain a position in the securities that we discuss today, and this podcast is for informational purposes only and should not be relied upon as investment advice. Hi, and welcome to the Stock Spinoff Investing Podcast. I'm your host, Richard Howe, and today I'm psyched to have Peter Smith of Palm Harbor Capital on the podcast to discuss a lot of things, but mainly IGT, which I think is a very interesting situation right now. Peter, welcome to the podcast.
Yeah, thanks for having me.
So, Peter and I connected because Peter writes a great quarterly letter, and in one of his letters, which somebody sent me, Peter basically detailed his investment case for IGT. The reason why IGT was on my watch list was because initially IGT announced last year that they were going to be spinning off their gaming business and merging it with Aviri. And then there was going to be so that was going to be a spin-off transaction that I wanted to cover. Since then, Apollo has come out and basically said that they're going to be buying this business that was going to be spun out. And then there's going to be a remaining lottery business. And the remaining lottery business looks like it's very cheap. And there's going to be, I think there's some reasons for that, but I think there is some investor confusion in the market. So I'm hoping that Peter can help us understand the situation there. But before we get into IGT, Peter, I would love to just hear a little bit about your background. I know you're based in London, but you don't have a British accent, so I'd love to hear how you ended up in London, and just hear a little bit more about Palm Harbor Capital, the hedge fund that you manage.
Yeah, sure. So I'm Peter Smith from Texas, as you rightly pointed out. I've been in London for about 18 years now, though. I started my career working for a German bank. So actually, during high school, I took a European history class and an economics class. So I learned about compound interest, and I learned that I wanted to see more of the world. So I backpacked around Europe, just learned the German language. Uh, uh, when I was graduating with my finance degree, I decided, because of the compound interest I learned about, I got was wanted to work in Europe. So instead of most of my colleagues in school would have worked for oil and gas companies in Texas in the finance department, I decided to go work for a German bank. After about a year in Frankfurt, I realized that in the pre-Brexit days, that is, that London is the capital of European finance, and so I transferred myself here, and I've been here ever since. I was working on the equity desk there, and then basically decided that the sell side was not right for me. I was an investor, not a sales guy, or not somebody just pushing short-term stuff. I wanted to take a long-term view and really dig into companies. So I went to London Business School, did the value investing course there, and then transitioned myself to start working for hedge funds. And basically, at some point, managed to convince one of the top European value investors, Francisco Garcia Parames, formerly of Bestinver, now running Cobus Asset Management, to back me. And so he, after much cajoling, I make it sound like it's very simple, but after a lot of work, I managed to convince him to give me some seed capital, and I launched Palm Harbor Capital. So Palm Harbor Capital is a value-oriented fund. We're long-term, take a 3-5 year plus view, focus on free cash flow, and we basically try to ignore the short-termism in the market and just try to find high-quality companies that are trading at what we think is a large discount to their future cash flows. Normally, there's something not, if it was everything was perfect, it would probably be priced right. So everything has something, wrong or whatever to it. As we're about to discuss with IGT, bargains don't happen for a reason. So it's basically just being able to do the research, talk to the right people, find the right, view that's different from the market, and take those bets.
That's great. That's really great background. So when you graduated from college, did you take a year off and you backpacked around Europe and spent some time in Germany?
No, so I did actually before. So I actually, when I was in high school, I played an online game back before the metaverse existed, and sold online property, and made some money. And then because of my interest in European history at the time, I decided to go backpack. So in the summer before university started, I backpacked. And I did another round of backpacking before I went to business school, and so I've backpacked pretty much around almost the entire world at this point.
And then how did you land a job in Germany? Did you just reach out to, I imagine it's not the easiest thing in the world to land a job in Germany when you're based in Texas.
Nope, and definitely not. And visas and everything else in the world is no, it's a lot of work. But luckily, Germany had a very good. So I actually started like a trainee, it was sort of like as an internship that turned into a traineeship that turned into a full-time role. So it wasn't just a simple snap your fingers. But yes, getting into. I mean, there were only four big banks. There are very few like large funds and whatnot. So yes, it's you had to cajole people and yeah, beg for things.
That's great. No, I backpacked. This was when I was in college. I didn't backpack around Europe. I backpacked in New Zealand with some buddies, and it was one of my favorite life experiences. So that's very cool that you got to do that once or twice. And then I'm also jealous that you got to live abroad. I have a good buddy who ended up moving after graduating from college. I went to Trinity College in Hartford, Connecticut. He went to London and spent 7 or 8 years there. And I was super jealous of that. I just happened to get my first job in Boston. I met my wife from the Boston area. My family's from the Boston area. So like I'm not going anywhere. And I love Boston, but it would have been nice to have experienced living abroad. So I'm definitely jealous about that. Before I guess a couple more questions before we get into IGT. I'd love to just hear about how so you're a value oriented fund. You take a long term approach. You're not too worried about the short term trades and short term volatility of the market. How do you go about constructing the Palm Harbor portfolio? Are you extremely concentrated? Are you long short? Would just love to hear a little bit more about how you think about constructing a portfolio.
Yeah, so it's long biased. I don't really take short positions, so I can use derivatives if I feel like it. But I don't do too much, to be honest. It's a long only focused fund. It's global, but sort of ex-US. I have some US names, but it's highly skewed towards Europe, and then kind of rest of the world. Have some Japan, South Korea, and these kind of things. And actually some also emerging markets, Brazil, Philippines. And yeah, so I just don't really focus too much on the US, although IGT is US listed. It's actually headquartered in London, controlled by an Italian family. So it's sort of uh, off in more of my basket of area. Um, and basically, it's about 40 positions, 20 of which are kind of the core, make up about 70% of the fund, and then 20 are sort of things I'm moving out of, small oil basket, whatever it is, that I have these smaller positions or something highly levered that you're not going to, swing to the fences with. Um, and yeah, it's usually there's kind of three buckets. There's this super high quality compounders. There's kind of special situations, including things like spinoffs, and then there's sort of just things that are just so cheap you just can't help but yourself from not buying it.
Got it. That's really interesting. And what do you think about, sounds like you're bottom up, so I don't know if you have a view on this, but what do you think? So obviously the US markets have really led global markets and the concentration has been extremely high, historically high in the US with the largest seven companies. I tend to think that there's some really interesting opportunities internationally. It's not my primary focus, but whenever I find an international spinoff, I'm extra excited. What do you think about opportunities in emerging markets and opportunities ex-US? Is that something that you think about, or are you just really focused on bottom up and identify the best situations you can find?
Yeah, I'm totally 100% bottom up. That being said, I don't do too much in the US. I think US is highly competitive. Everybody's looking there. I do lots of my own research and do very, bottom up focused. And when you're competing with everybody in the world, focus on the US and it's the hot market and that's where everybody's looking. I tend to say, well, nobody's looking in, emerging, in Greece or the Philippines or, I mean, there's uncovered stocks. There's no commentary on the internet about this, there's just nothing. You have to go do the work yourself. So I find that more interesting and rewarding. And yes, the entire world is focused on the US and a few stocks in particular. But I'm managing to, I mean, I'm not beating the S&P 500, I guess, but I'm doing double digits compounding in small caps, ex-US with a value. Uh, so basically every factor going against you, I'm still doing fine. So if one day people do decide to buy ex-US value, small mid caps, maybe it'll be the extra boost to fund performance.
Yeah, it's been a crazy run in terms of the US performance and in terms of growth stocks versus value and in terms of large cap versus small cap. So you have a lot of factors going against you. So that's very impressive performance considering all those headwinds. Okay, before we get to IGT, one last question. So this is the Stock Spinoff Investing Podcast. So just would love to hear about how you think about, I guess, special situations in their entirety, but also spinoffs.
Yeah, so I'm obviously a major believer in spinoffs. I read Joel Greenblatt's book very early in my career. When I was at London Business School, I was actually there was the professor there was Eddie Ramsden, who actually took the course in Columbia. Was taught by Joel Greenblatt and was subsequently seeded into business by Joel Greenblatt. So yes, I have a deep history with spinoffs, and I follow anyone that happens in Europe. I'm on top of it. I mean, in my portfolio, in the last year or so, I mean, we've had Telekom Austria spin off its towers business. We've had Solvay break up into the soda ash business and then the the growth business or what they call it in Science Co. So yeah, we follow them very closely, and we're big proponents. We love all the fundamentals behind spinoffs, which I'm sure uh, has been
Got it.
discussed on this
Yeah. Okay. So
podcast over and over again. So no reason to discuss them here.
yeah, exactly. Okay, great. All right. So, with all that out of the way, that was really interesting, but I would love to pivot to talking a little bit more about IGT. So maybe I got a lot of questions and I think we spent an hour in November, December talking about it too. So, um, but would love to hear just a broad overview of the IGT situation and why you think it's interesting. And then I have some questions and we can just discuss from there.
Okay, so we'll start with a little bit of history, I guess. Although I'm not an expert and I don't want to go, don't want to say anything too completely off the wall. But basically, IGT was formed by the merger of GTech, an Italian company, with IGT, which was at that time actually listed in the US as well, back in 2014, I believe it was, or 2015. It was basically supposed to be like a merger, but I think GTech basically took them over and controlled the company. It remained listed as IGT. So GTech kind of name went away, but GTech was basically the Italian lotteries and Italian with Lottomatica business, which is like VLTs and gaming machines and that in Italy. And had some US business, but not a lot. And then IGT was basically slot machines and also in the lottery. And basically, these two came together and worked and came on with a lot of leverage, which because that's an important bit. I think they had about 7.5 billion of debt at the time, and they were probably about 4.5 times levered. And GTech was controlled by is controlled by an Italian family, or yeah, so it's like 60 members of the family now, so it's like fourth, fifth generation. But there's one holding company that controls it called De Agostini, although that's not the family name, so don't get confused by that. Um, and basically, they've been running the two businesses. Basically, there's the slot machine business, which is based in Las Vegas, and then there's the lotto business. The slot machine business, I don't want to spend very much time on, but basically, it's mostly slot machines. I don't completely understand slot machines, but people get addicted to them, I guess, and spend lots of money on them, and it's perfectly. But you need to keep updating the machines. You need to keep coming up with new concepts. A lot of R&D. The market's controlled by the kind of three or four large players. So Aristocrats in Australia is now the market leader, although at the time of the merger, IGT and Science Games, Sci Games were the market leaders. Sci Games was losing market share, was also very highly levered. Um, and then there's basically these three, and then several small players started entering the market. You had Every, which it was discussed in a little bit. So you have Play AGS, you have Ainsworth in Australia. So you have a lot of small guys doing some small things, but basically you have these three big players. And then on the lottery side, IGT was basically the largest lottery is in of all of this in the United States. It's in almost all of the states, about 40 of the 45 states that have lotteries. They have um, two lottery contracts in Italy, which we get onto in a moment, which is very important. And then they all have a smattering of lotteries across the world in smaller jurisdictions. But they're the predominant multi-jurisdiction lottery company in the world. The next one would be Cygames. So Cygames broke up. Brookfield bought the lottery business from Cygames, and then Cygames subsequently renamed themselves Light and Wonder, and also subsequently relisted themselves in Australia, where Aristocrat is also listed. Um, and that's yeah. So it brings us to kind of to today. Well, we can go through a little bit to also. The company was, highly levered, paying large dividends to the shareholders. Um, we can get into the lottery business in a minute because it's going to be a more complex bit. But basically, you had the two businesses. They went through COVID. It was the first time. I mean, at the end of the day, lottery and even the slot machine business is pretty much recession proof. People gamble whether they're making money or not making money, I guess. And buying a lottery ticket when you go to the convenience store or gas station or whatnot is just part of And if you do it when the economy is bad, so 2008, 2009, people were buying lottery tickets. You didn't even see a blip. And so actually, COVID was the first time you actually saw, you, people couldn't go to the store, couldn't go to didn't drive around and went to the gas station to buy their tickets. So that's the first time you actually saw like for like serious declines in lottery tickets. And of course, if you're highly levered, their leverage went from like 4.5 times to like 7.5, 8 times, and it started to look a little precarious. And that's actually when IGT started to transform themselves, and they kind of got out of their uh, kind of steady state where they are always in, just paying the big dividends and just kind of mediocre going on through life, and they started really focusing on the business. So they went and they started delevering. They cut the dividends, which they probably should have done on years before, but they finally cut the dividends, started focusing on cash flow generation. They sold in 2020 Lottomatica, which was basically the VLT and slot machine, or like kind of gaming machines. As you go to a bar and you play the gaming machines in Italy, in these little places. And it also had the online kind of iGaming and sports betting business for Italy, in the little shops you can go in and do your sports bet. And so they sold this to GameNet, which had also I also owned it previously, and which had been bought by Apollo, which we'll get onto in a minute. But and then basically they merged the two businesses together and then floated them, and now Lottomatica is also on the Italian stock exchange as a pure play Italian iGaming and lottery. Sorry, not lottery, iGaming and sports betting business. And then so that gave them about 950 million, if I recall, of proceeds to help them delever. In 2022, they sold an Italian business I didn't even know they owned. It was a software and payments business for about 700 million. That helped them delever. Natural cash flows. Obviously, the market came back. There was a boom in casino spending. All the casinos wanted to reopen with a big bang, and so they started spending on slot machines, and the capex and that came back, and there was a nice boom. And so finally, they managed to delever themselves a bit and get themselves organized. But then they said then they're actually focused on the business. They're like, oh, we're trading at a very low multiple. They're trading at a 5-6 times EV EBITDA, and you saw Aristocrat in Australia, and you saw Light and Wonder, who had relisted in Australia, and you saw which basically were trading at 10 times plus EV EBITDA. And then you had on the you look at the Brookfield transaction, which also happened, I think, around 2022 and 2021. I forget exactly. They helped Light and Wonder Cygames. They bought the business and is on a trailing times. My calculation is about 13 times. I think they said in the press release it was less, but if you put some corporate costs in, I think it was around 13 times EV EBITDA. So you're looking at this company who's like, well, we have publicly listed peers in the slot machine business, which are trading at 10 times, and we have a transaction over here that was at 13 times for the lottery business. And if you look at lottery listed peers, you have in France FDJ. I won't try to actually say the name in French. You have the lottery company in Australia. You have OPAP in Greece. I mean, they're all kind of single country, single kind of different markets with different concessions and different beasts, but they're all traded at much higher multiples. So then you had IGT, who's like, well, we have kind of this and we have that, and we're trading at a massive discount. And so they launched a strategic review of the business to try to maximize value. And so the market got a little bit excited about that they're trying to unlock the value in the company. And so they basically said, okay, we're interested in divesting or doing something with the slot machine business. There were rumors at the time that Apollo would come and buy them, and the stock went up, I think, into the 30s. But then Apollo, a deal for that never did happen. And so they basically came up with another plan, which was to spin off the business, which is again why you got interested. And I was also very interested in it, although I was already a shareholder. They're going to spin off the business and merge it with Every, which was another publicly listed is another publicly listed company that's, like I said, they were one of the ones with a smaller market share in the gaming business, and merge the two businesses together. And the market did not like that at all. There's a number of reasons why the market did not like that. One is because they thought Apollo was going to buy it for 4 to 5 billion and that it'd all be done quickly. And instead, they were like, "We're going to do this very complicated transaction, and then the synergies are going to take X number of years and everything." And so the quick buck wasn't going to be made. And then there's also going to be a taxable transaction for U.S. shareholders. We can get into that topic, but there's reasons why they were probably going to do that. One is I think the holding company, DeAgostino, wasn't going to pay the tax because they were in Italy and it was a London-based company, and there's no dividend tax for that. So they were like, yeah, let's do it taxable because we're not paying the tax. It's just U.S. investors. Who cares about them in the short term, right? Because we're going to take 3 years to realize all the synergies and somebody will forgive us, I guess. But anyways, long story short, the market did not like this transaction. And at the same time, people started looking at this, they realized, oh my gosh, the Italian, one of the two Italian contracts is coming up for retender in 2025. And that started, and the people started looking at it not as part of these two, the slot machine business together and the lottery business. They started focusing on just the lottery business. And then people were like, oh gosh, this is a pretty important contract. So you had basically a lot of pessimism around the name because you're doing a taxable transaction, a spinoff, and not getting the quick buck that everybody thought they were going to have. And then people started, the sell side started writing about there's an upcoming concession renewal, and it's a big one. And that is kind of where that's where we were like a few months ago or a year ago. Since then, Apollo came back and said, you know what, we are going to buy the business, and we're going to buy the business and Every as well. So they came in and offered a little over $4 billion. So in that range of 4 to 5 billion that people thought the business was worth. And so that looks like it's going to close in this year in 2025, probably in Q3, but it depends on getting all the regulatory approvals and the gaming license approvals and all that kind of stuff. And so now the only thing that people are really focused on is the lottery renewal. So to get a little bit into understanding the lotteries, in the US, you have lottery, all the states have different lotteries and they all have different contracts and they're all kind of a little bit different in how they're structured. So it's really difficult to get into, but almost all of them you have the long-term contract. And a lot of them you pay an upfront fee to, renew the technology, you renew the IT systems and the background systems and everything. So you have to have like an upfront fee to the government, and then you also have an upfront cost of capex to upgrade all the systems in the state. In Italy, it's the same thing. You have basically it's a long term, and one of the reasons the company's levered, by the way, is because the whole business model in lotteries is you pay a lot of money up front, and then you get like a 10-year contract. And so it's a business where you expect leverage to go up, pays down over time. Leverage goes up, it pays down over time, and it's basically the business. So getting a little too focused on leverage in it is a little bit of a will throw you off. But in any case, the Italian lotteries are the ones that are important, the ones we're talking about. There's three of them in Italy, which is important. IGT is in two consortiums with two of them. So one is just the I don't know how to Italian either, but just with the lottery that you probably understand. You buy the tickets and you win the big prize, and then there are also the scratchers. So the one that's coming to do is the kind of the normal lottery. It's being renewed this year. They had it for 10 years. It was last renewed in 2016, actually, a 9 or 10 year contract. They paid 770 million, or the consortium paid 770 million upfront for it, and it's coming up for renewal. Uh, so they're in a consortium. The second, so they own 61.5% of the consortium. The second largest is a company called Allwyn, which is not listed, although they do have public debt, so there is information on them. It used to be called Saska. It's a Czech company. They've been in lotteries for a long time. They are the controlling shareholder of OPAP, which is the Greek lottery business, which is listed in Greece. And then there's another, I think 4% is controlled by the Tobacconist Union, which is a very important, which we'll get into in a second. And then I think 2% is the Austrian company Novomatic. So they were in the consortium. I think it was uncontested last time in 2016. GTEC and IGT have controlled this since it was privatized. And they won the tender, I think, in 98 and in 2016, one in between there, I guess. And so they've controlled this since it was privatized. And so they have the deepest understanding. They have the men on the ground. They understand everything about this lottery, which is important. So then we were coming up for the tender, and so everybody's like, well, they could lose this tender. So last time around 2016, there wasn't any natural person to compete with him. Really, I mean, you had Cygames, but Cygames is actually also a minority partner in the Scratch and Win game. So they're also, I mean, everybody in gambling is, there, as far as I could tell, or you have kind of interrelationships where you're like, well, on this we're competing, on that we're friends, we're in a consortium together here, but we're competing to get, over there. It's seems to be very prevalent. So frenemies, I guess. So you have the situation where, okay, we're coming up for a tender, and now people are worried about it. So why are people worried about it? Well, the market's consolidated a lot. There was a lot of PE came in, and a lot of companies merged together, and things have changed. And so Sisal, which in the last one was owned by CBC, has been bought by Flutter. And Flutter is obviously one of the largest gaming companies in the world. Irish, they control, I think it was a FanDuel in the US. They have, Betfair and, Paddy Power in the UK. They have major stuff in Australia. They're just a global powerhouse, but they're primarily on the iGaming and sports betting side. Not primarily, they basically are on iGaming and sports betting. And the only lottery that they have a little bit of a lottery, but it's kind of a very small thing that they don't really, I mean, they spend 10 seconds talking about it at any given time. One of the lotteries that they do have is through Sisal, which is the company in Italy. Sisal is the second largest after Lottomatica, the former company that was that IGT used to control, and is now listed on the Italian Stock Exchange. So there's Sisal is now owned by Flutter. Sisal has the third Italian contract for lotteries. This lottery game I don't completely understand, but I think it's the lowest probability of winning in the world, but a very high payoff kind of thing, and it's with like 5 numbers, and I don't know. I don't play the lottery, so I don't know, and I don't play the Italian lottery for sure. But anyways, they have that contract. Of the 3 contracts, IGT controls the other 2, the scratch contract and the kind of normal lottery contract. So Flutter has recently doubled down in Italy. They just bought Snaitech from Playtech. Playtech is also listed in London. They bought Snaitech in 2018. They are selling it to Flutter at the moment for about 2.3 billion euros. So basically, that's going to bring Sissel's market share up to around 30% of the iGaming and sports betting markets, kind of very similar level to where Lottomatica is today. So there'll be two that control 60% of the market. And because Sissel also has that contract, and I think they also have a couple of other small lottery contracts, I think maybe Morocco or something, I don't know. But it's basically a very small part of Flutter's business. But Flutter has mentioned in the to the press that, oh, we're interested in looking at this lottery contract. And so I think that has scared the market quite a bit. Is will Flutter, and Flutter's a much larger company than IGT is. It's I mean, people put huge, I mean, multiples on the US business and everything. I think the market cap is what, like 50 billion or something now. I mean, it's massive compared to the size of that's 48 billion US dollar market cap compared to IGT, which is like 3.5 or something today. That being said, if you look at the Flutter, like I said, is in the process of buying Snaitech. So one can argue that their management is a little bit busy there. And they're a serial acquirer. They're also doing a deal right now in Brazil. And their net debt EBITDA is also not in the best place for paying for this contract. So this contract is big. The Italian government has come out with the terms, and the minimum that they will accept is a billion euros. So it's a rather sizable contract for anybody, but particularly for for anybody. Yeah, so people are worried about Flutter. I mean, there's other people who could go into this tender. There's the French FDJ who well, they bought the Irish lottery, I think in 2023. They control the French lottery, but they have also recently bought a sports betting and an iGaming company in Sweden called Kindred, and spent, I think, 2.5 billion on that. So again, their leverage is actually much higher than it was. I think it was net cash previously. Now it's almost 3 times levered. And but there's some chance that they could try, but having no local, Italian presence, I think they'd have to find a local, one of the smaller. They had to find somebody local, probably, to do a consortium of some sort. Would be, I guess, if they wanted to try. I mean, Allwyn would be the other one who could try, who has, I mean, not quite the balance sheet. They're also highly levered, but they recently won the UK contract. So lottery contracts don't change hands very often. They're long term. Renewal rates are very high. People in the market say 90% roughly. But they do get lost occasionally. You see a couple of U.S. States, Intralot lost in Ohio recently to IGT and to Cygames on two different parts of the contract. And the biggest one that was lost recently, as far as I'm aware, is the Camelot, which was the UK operator. And the UK operator, IGT was actually a very, very tiny part of that consortium. They were providing some IT, and I think they had like 1% or something, a very small amount of in the consortium. But they lost, and Camelot lost, which, funny enough, Camelot was controlled by Ontario's pension, Ontario, whatever it's called, pension. And funnily enough, the Irish lottery, which was bought by FDJ, was also owned by Ontario Pension. So maybe there's some connection where Ontario Pension just wasn't doing a very good job running lotteries, because why would a pension fund be amazing at running lotteries? But anyways, Allwyn won that contract. So people are like, oh gosh, a major contract was lost. And so now I think in everybody's head is like, IGT could lose this one too, because Camelot controlled that contract for quite a long time. So we were a little bit worried that Allwyn might try to come in as well. But IGT and Allwyn have both confirmed that they're going to stay in their consortium together with the same levels. So there's some well, so that's good news that we've eliminated Allwyn, because if we're keeping him in the consortium with IGT. Anybody else? Could the Australians come? Sure, but they've never left Australia, and they have no European presence, as far as I'm aware. Cygames is now owned by Brookfield. Like I mentioned before, they just won a contract in Ohio. Cygames, when they got bought, I believe was around 7.5 times levered when Brookfield came in. I mean, at post the transaction. pre transaction, I think we're also 7.5 times levered. Funny enough, but post transaction, they're 7.5 times levered. From my market intel, their EBITDA has actually declined since the deal happened, not increased. And while that was 2 or 3 years ago, I don't think they would have made anywhere near enough free cash flow in the meantime to delever themselves in any meaningful way. So I think the probability of them coming on and bidding for $1 billion plus is very, very low. Yeah, they could possibly go into a consortium with Flutter or FDJ, possibly, but there's no way they could do it on their own. So I don't think they're a major risk. So yeah, the major risk is there's an offside chance that FDJ or somebody could try, and then Flutter is the main concern. Like I said, Flutter's main business is iGaming and sports betting. They're really focused on the US. If you listen to their Capital Markets Day, it's like 90% we're taking over US gambling, right? And they're doubling down in Italy. They love Italy. Um, and they said that they're looking at the contract. So I mean, there's a good chance that they come in. So that brings us back to, okay, why would IGT win over Flutter, I suppose? I mean, besides the fact that IGT has controlled the contract for whatever 30 more than 30 years, they know the market, they have the people, they have the expertise. They've been doing a really good job. Um, no one can argue that they've been dropping the ball or having mess ups. So losing, like I said, the renewal rates are generally, like I said, around 90%. Um, so what could go wrong, go right? Um, well, you could look at, for example, Alwyn took over the UK contract, and they've done a terrible job in the first year and a half year. They haven't bet what they're supposed to be doing. They haven't done what they told everybody they were going to do. They're not meeting their objectives. Taking over a new big contract when you haven't been there doing it is it's a big risk. Um, and so while there's a big upfront fee to these contracts, there's also ongoing tax revenue. Every lottery ticket you sell, there's also tax. So, you know, giving up 100 million on the price of the upfront, or is it worth losing a couple 100 million or 300 million, 400 million in the first year because the new operator doesn't know what they're doing, and the ticket sales aren't what anybody expected, and the systems weren't properly up and running and everything. I mean, is price everything? Well, we can go in. So the tender documents came out in January. January 10th, we saw what it is. So in the US, price is generally 30-40% of the contract, and then you have IT operations, how they do with all the other criteria that you look for in an operator, reliability, et cetera, et cetera. In Europe, most of them are on kind of 50-50. In Italy, it's higher, so it's 60% price, 40% kind of operations, IT, expertise, all the other things. However, that's actually down from the previous one. So in the 2016 tender, it was 70% price and 30% other. So I think it's pretty clear that IGT has the 40% locked up, so it's just the 60%. I mean, they're going to have higher points scored in that bucket. And like I said, the other things you can say besides Flutter doesn't have the experience in the contract, or and they're not a pure play lottery. I mean, this is going to be a pure play lottery where management's 100% focused on lottery. Flutter is, well, we are in all over the world. We do more than, with 3% of our business is lottery, maybe. The guys in Italy have run this contract forever, but there was a legacy contract from when Sissel pre being bought by Flutter. Even the local Italian, it won't even be the biggest part of the Italian business. It's going to be a small part of the Italian business because the Italian business, and they're in the middle of M&A buying up Playtech. So if you were the government, would you say, okay, this guy's management team is in the middle of a complicated M&A transaction, and these guys are iGaming and sports betting guys, not lottery guys. So you can make that argument. At the end of the day, though, maybe money talks. But IGT is selling their business for $4 billion, and they're in the best shape that they've ever been on a net leverage basis. And Flutter is been buying stuff in there quite, they're not, they're also levered, so they're not in any particularly larger or better off position, except for the fact that they're just a much larger company, definitely way more highly valued from company from an equity perspective, anyways. Yeah, so that's kind of where we are. Other kind of small things that a lot of people probably don't think about is I mentioned earlier that in the consortium, it's 4% owned by the Tobacconist Union, or is part of their consortium. So in Italy, the lottery tickets are sold by the tobacconist. So you go to the little corner shop where it sells you cigarettes and they sell you the lottery tickets. Even inside supermarkets, it's the cigarette counter guy who's also in the tobacconist union who's the one selling the lottery tickets. So the lottery tickets are sold by tobacconists. And so having the tobacconist union in your consortium, I can only imagine is a good thing. Um, there's 35 or 36,000 tobacconist shops, and I guess each one's kind of franchise owned by a guy. There's also 36,000 voters who are the government probably cares about and stuff. So having them in your consortium is probably another kind of small little tick in your favor as far as winning this contract is concerned. So that's basically brief overview. I think brief, that was quite long overview of what's happening.
No, that's
I guess
great.
what we didn't talk about, I guess, is how important the contract is. So, uh, and I think it's a little bit up to interpretation how important this contract is. So in the 20F filing in 2023, they said that this contract was 10% of sales, and the other scratch and win is 9% of sales. Obviously, they're now selling part of the business. So pro forma, it appears that this one is about 16.5% of sales, and the other one would be whatever 15 or 14.5% of sales or something like that. However, on an EBITDA base, okay, an EBITDA basis is probably more. However, they only own 61.5% of it. So if you take it to minority interest, it's again not as important looking as it is. On the other hand, Allwyn breaks out some numbers, and they talk about what the EBITDA is and what the cash flows that they're receiving from it. We don't have cash flow history going back to the beginning of the contracts. So one of the things about these contracts is you have a lot of upfront costs. You're paying for the fee upfront. You're paying for the capex for the IT systems and everything up front. And so the cash flow profile is back end loaded. So we do know what the last couple of years are of dividends, and the cash flows look quite high and attractive. However, we don't see the front end. And if you look at the book value of these contracts in the financial statements, um, they're part of it is being depreciated. And so also with the minority interest, you have part of a return of capital component and kind of the earnings component. Um, so then you can look at the IGTs. They have two major minority interests in both of these Italian contracts. So if you look at Allwyn's numbers, it looks like this is a very important contract, but at the same time, it can't be because the other contract is roughly the same, probably lower margin because it's scratch cards, which have more higher costs and other things, and then the take rate's a bit lower and all these other kind of things. Um, but it is a significant contract and it is very important, and losing it would be detrimental. So it would be best if they don't lose it. And they have controlled it. They're a pure play lottery ticket. This is their bread and butter. And I don't see why they would lose it, given everything I mentioned. But it would be bad for the company. That being said, they'd save themselves €1 billion of and on a 3.5 billion market cap. That's not an insignificant savings that you could do other things with. I mean, if the stock goes down and buy back 1 billion of stock, you know fixes the entire problem right there, right? But yeah, I mean, I've also a few other tits and dads. I've read some sell side saying, oh, but Flutter could use it to like cross sell their iGaming. I don't buy that because, like I said, the tobacconists sell how do you cross sell iGaming with a tobacconist? I don't quite understand that. And if there was a major synergies cross selling with the iGaming, I mean, Lottomatica used to own, or sorry, IGT used to own Lottomatica, and someone in the sell side wrote that, oh, there's maybe they can make 100 million of synergies off this deal. Okay, if why would IGT sell Lottomatica for 950 million if there's 100 million of synergies with the lottery business? I mean, it just makes no sense. So I don't think there's any synergy potential for Flutter in this. It would just be trying to diversify in Italy a bit. So again, this is what IGT does, and this is not what Flutter does, and that's why I'm fairly relaxed about the outcome.
That makes sense. You make a compelling case that this is unlikely. given historically the incumbent has renewed at 90% and all the other factors that you've spoken about. That being said, if they do lose the contract, how do you think about the valuation in that scenario?
Yeah, so they could lose. I mean, on a pure unadjusted basis, you're talking about losing 25% of your EBITDA. What multiple do you put on the rest of the business? Again, because they've been kind of this, I wouldn't call it conglomerate being two businesses, but they've always traded at kind of a six time. On the flip side, they've also doing this transaction. They're massively deleveraging themselves. They have, I mean, I think they have 400 million in costs, but outside of that, they have about 3.6 billion that they can delever themselves massively. They can buy back stock. They can talk about, they can pay a special dividend. There's all sorts of things that they could do. They could bid on other contracts. They'll have lots of extra cash. In my valuation, I've always taken off over €1 billion of equity value for this contract. So if you just kind of take that line out of the valuation, that automatically makes up for a very large amount of 10 years of discounted cash back to today. So in my opinion, the stock will drop. Uh, I kind of use kind of a 7-8% free cash flow yields. It hits the bottom. The worst year will be 2025. So if this happens in Q2, which is likely, the stock could be 15. I mean, maybe it'll drop in the short term before, lower than that. Again, if you look at EBITDA and you say six times, yes, you could hit, like again, around $15 a share or something. But ultimately, I think it's probably worth north of 20 without this contract. If they get this contract and they get a re-rating, then we're talking, north of 30 and even mid 30s. So I think the risk reward is, you take a few dollars of downside in losing it, but in 2 years' time, things will smooth itself out and it's probably in the low 20s. On the flip side, if they renew the contract, I think you're in the low 20s immediately. And if you start getting re-rating and start seeing the cash flows, really invert in 2027 or so after the first couple of years of capex, then you can be back in the 30s or even mid 30s or high 30s. So I think it's a pretty compelling risk reward case. And I think the probabilities right now, it looks like the market's basically saying there's more than a 50% chance of them losing this contract. And I just don't think that's the right probability we're putting on it. I mean, is 90% too high? I mean, maybe, I don't know, but it's definitely not sub 50%. Um, and yeah, so from a downside upside perspective, I think it's pretty clear that if you can stomach a bit of volatility, if you can't stomach the volatility, you probably just wait till afterwards. The stock will pop on the day, but you probably still have 50% upside from there. So, but I think it's compelling now, and I've learned trying to time markets and people's opinions and stuff is just wrong. Because I mean, for all we know, people press will leak something, and this thing will be trickling up, and then it'll be in the 20s already before the announcement. Maybe it'll pop on the day, but then you've already missed 50% in the stock or something. So I don't try to time what other people are doing and how they're thinking and anything like that. I just say if it's compelling today, buy it today. Um,
Makes complete sense. And then some more like housekeeping issues. So I think Apollo is paying, they're paying, or they're going to pay $4 billion. The portion that goes to IGT is going to be $4 billion from Apollo. Is that right?
yeah, 4.05, I believe it's supposed to be.
4.05. And then do you have a sense or has management shared how much of that is going to be lost to either, expenses or taxes or things like that?
Yeah, they said 400 million is what they think will. They basically said that it'll be less than 400 million, I believe is the wording. Um, so it should be. I've been using 3.6, a little bit of the extra 50 million of headroom there, but I mean, obviously inflation, who knows?
And then management has also hinted that they're going to do a return of capital. Is that right? And is that likely to be a special dividend or a share buyback, do you think?
So what they have said is that they're going to pay off at least 2 billion of debt. So we have 3.6 billion post that. So we have 2 billion that they're definitely going to use to delever themselves, which is necessary after selling the gaming business. So it's 1.6 billion. Then they said they're going to use it for shareholder returns. They have not specified anything about what that means. Um, and I guess it's going to depend on what happens in this tender will make a huge difference in what happens. Because if they lose the tender, they probably need to pay off a bit more debt, maybe another 600 million. to get their net debt EBITDA to a more comfortable zone, and they'll have less money to pay out. Um, and also their stock will probably be lower, and it'll probably be more compelling for them to do a share buyback. So my guess would be if we lose tender, they pay off more debt and they buy back shares. Traditionally, the holding company loves dividends, and they've always been a big dividend payer. They were very reluctant to cut the dividend in COVID. They bought it back very quickly. They want the dividend. There's 60 families to feed off of it, I guess. So I would, if they win the tender and everything goes well, I'm going to expect a large special dividend of at least 1 billion, if not 1.5 billion. And
And
again, this is a stock that's we're talking at 3.5 billion or so. So paying back 1.5 billion is not an insignificant amount of
pretty
capital.
meaningful. Do you have a good regard for their management team in terms of, capital allocation? Have they historically made pretty good capital allocation decisions?
Yeah, I would say up until COVID, they, I think they should have delevered faster and they should have not paid such a high dividend. But obviously, they had, I'm sure the family shareholders were like, we want the dividend. And, like I said, this is a business which traditionally doesn't have a lot of cyclicality, doesn't have a lot of, the cash flows are quite regular. You could be levered and it's not that big a deal. But you want to be delevered before the next tender comes where you can, you know, pay for the, when New York State comes up or Texas comes up or whatever for a big tender, you need to have the capital to deploy. But like you don't need to be running at the net cash position. It just doesn't make any sense in this business. So I would say up until COVID, I wasn't very impressed, and I always told them to cut the dividend. Um, that being said, since COVID, I think they've done everything very shrewdly. They bought back shares when the share price was low. They, they, you know, sold the businesses that they weren't strategic for them. They paid down debt to, much more reasonable. I think it's like 2.6 times pro forma right now. I mean, much more reasonable than 4.5 times. They pay decent dividends. They don't skimp on reinvesting the business. They have the capex. They're spending, making sure they win the tenders they need to win, and they spend the money on IT and research that they need to spend. So I think they're doing a good job at the moment. And obviously they launched the strategic review because they wanted to unlock value, and they wanted to create value. So it's not like there's a family who just doesn't care about what the price of things are and is just sort of using it as a piggy bank or something. I think they're actively trying to create value here.
Would the RemainCo ever get sold? My understanding is that the RemainCo is viewed as a better business, less capital intensive, maybe less cyclicality or equal cyclicality to the slot machine business. Do you think the family would ever sell that RemainCo business if they got the right price?
Yeah, this is not a business that they. It's not like their great grandfather, uh, was the founder of it or anything. The family was in the publishing business and like paper and publishing business, up until like 20 years ago or 30 years ago. And I think they made a few. They started off as this, the holding company started transitioning, I think in the late 90s or something, and they were involved in the nationalization of like the yellow pages, and they bought a stake in Generali, and they bought and sold a few things. So I think they really like this business. But it's not like they have a deep connection with it where it's like, I'm selling, my great grandfather's like legacy or something. It's not like that at all. This is, it's been run by outside management. I mean, there's some family members on the board. There was family involved in the business, but it's run by professional managers now. Most of the board's kind of professional managers. This is not something where I think if somebody offered the right price, they would, they're going to be like, no, there's no way we're selling this. Like, so I think it's very. I think the likelihood if they get the next couple of tenders, yeah, I mean, there's a good chance, I guess, that they would sell. But I'm not in I have no idea. I'm not in the family. I'm not in any discussions. I have no inside knowledge of it whatsoever. But I don't see them being like, this is some real deep connection that we would never consider letting go of or something. Um,
That makes sense. And then I guess timing. So I think you've touched on it, but we should expect some decision on this Italian tender by Q2, you would think?
Yeah, so I mean, I'm shocked because Italy generally does not work like a like clockwork with these kind of things. I mean, there's some concessions which have been like rolled over for years and years and years, and like no, I mean, these are not, generally speaking, Italian government's not the most efficient run body of who's making all these great decisions perfectly all the time. That being said, this all started. They changed a bunch of the rules 2024, like last year. They said that they were going to come out with some of the things. They came out with what, the kind of basic idea behind everything. They said in Q1 the tender documents would come out. They came out on January 10th. In the tender documents, it says that the tender is due by I think it's the 17th, 27th, 17th or 27th of March. I think it's the 17th of March. Um, and so you have to have, they're going to know about before then, and and then the outcome should be in Q2. And given the budget that they're trying to put together and pass, I think by the end of Q2 and everything, I think it all kind of flows where you're going to hear sometime in Q2 what the answer is. And that's what management said. I think on the Q3 call or the Q2 call, they said we expect the documents to come out in Q1 and we expect an answer by Q2. The tender itself, I think, runs out in, I believe it's November, if I'm not mistaken, which I could be, but so don't hold me on that one. But I believe it runs out by November. So you kind of, if you're going to have a new operator start doing things, they need to kind of get on the ball and start doing things. I mean, usually there's a bit of a handover period and all this kind of stuff because again, you don't want to have massive, mess up in these kind of things and lose all your tax dollars or and all that kind of stuff. So it's entirely possible we'll all know by like the end of Q2, and this we'll see what happens. Um,
And then the every transact or the Apollo transaction that's expected to close in Q3. So it's going to be Q2 we'll see the Italian concession, yay or nay, and then Q3 will be the Apollo transaction closing. Is that and it
that's
seems like every is traded in the public market and the spread is very small. So it seems like the market's thinking that that transaction has a high probability of closing. So that seems to point to that the market, the concern in the market is just related to this Italian contract. I don't know if does that does that make sense to you?
yeah, absolutely. I mean, like you said, I happen to be a shareholder of Every at the time as well. And yeah, but I follow it closely. And yes, the spread is fine now. And Apollo's they know this market. They've been involved in lots of transactions. They were they know what's going on, and they've dealt with all the regulators before. They have regulatory approval for lots of places already. They're not like unknown to what's happening. So I think their timeline is probably very accurate. So I don't expect anything to go wrong with that side of the transaction. So it really just comes down to this rather important contract that's coming due. And for the first time they have a kind of a somebody who could be considered a serious contender. I don't think from everything I know, it doesn't seem like it could be that serious. But it's you never know.
Never
Government
know.
can award things to whoever they want.
Right.
So
Right,
so
exactly. Yeah. Market doesn't like uncertainty, so it makes sense. I've also found just in following the special situation market that oftentimes a stock will pop after, say it's a situation where a business is selling a portion of like a segment for cash, and there seems to be a high probability that the transaction is going to close. The stock reacts very strongly oftentimes to the transaction actually closing. Even though the spread of this Apollo transaction closing is very low, implying that the odds of it closing are very high. Um, Sometimes the market reacts very positively when the transactions actually close.
yeah,
It could be a situation where you get the good news on the Italian thing, and then you get the good news on the Apollo transaction, and it's kind of off to the races. So this is a very good special situation. There's a lot of angles here. So I appreciate you taking some time to walk us through it. Anything else that you would highlight with IGT before we wrap up here? I mean, I think this has been a very, very comprehensive overview, but anything else that you would mention before we wind it down here?
I'm sure there's a million things I could have mentioned. I don't remember, but no, I think we covered. I mean, most of it. I mean, we could go much more deeper into numbers, but I think this is not investment advice, and do your own research.
Right,
You can
exactly,
build
exactly.
build your own spreadsheet. So we don't want to go too deep into everything, but yeah, like I said, it looks really compelling. Yes, it's a big contract, but again, the probability I think is just completely mispriced in the market. And even if they don't get it, there's still I think considerable upside. So the risk reward here just looks compelling.
Awesome. Awesome. Well, really appreciate you taking some time to share your knowledge. I mean, when we talked about it earlier, you were telling me how you attend these conventions, these gaming conventions, and you've been so you're really going in the weeds, and I really appreciate that. I don't have the time. It's more kind of big picture valuation to me, and that's what really stuck out about this situation. But it's really nice to have an expert who's gone in the weeds and actually attended the conventions and talked to a lot of people to really share their perspective. So I appreciate it.
Thank you.
All right. Well, before we wrap up here, I would love to, or please just share where investors or folks that want to get in touch with you can find you. I don't know. I actually don't know if you're on Twitter, but I do love getting your letters. So maybe share some information about getting in touch with you or being able to access your letters.
Yeah, sure. My letters can be found on the website. It's palmharborcapital.com. You could spell that both with the British and the American spelling of Harbor. Both will send you to the website.
That's smart.
Uh, yeah, and yes, you could also. I mean, you can email IR at palmharborcapital.com and ask to be added to the list. Although you can do it on the website. There's a box you can type into your email address, and yeah, I mean, unfortunately, the fund's not available really for American taxable investors. It's really set up for non-taxable investors and European investors. But yeah, do get in touch if you're interested in the fund or learning more. Like I said, the easiest thing to do is visit the website palmharborcapital.com, or you can try to find me on LinkedIn. But good luck. My name is Peter Smith.
I actually was able to find you on LinkedIn, so don't give up if it's hard at first. All right, Peter. Well, really appreciate you taking the time and enjoy the rest of January, and I'm sure we will talk soon.
Great, great. Thank you very much.